Hey there, this is Valuationary. My name is Priyal Bhatia and I am here to answer the most googled questions on stock markets. So without much ado, let's get straight into it. So let's get started with the top most googled question on stock markets. It says, how to identify great stock companies? Damn, I really like this question. You know, it's quite a testimony to the fact that we Indians have moved past the era of scavenging for stock tips from our friends, family, and relatives. Trust me on this, learning how to identify great stock companies is a much valuable skill. To begin with, the traditional indicators include things like where is the company and its products vis-a-vis competitors? Does it have a moat? Is the company able to generate positive cash flows from its operating activities? And how has the company management's past track records looked like? But besides these, one must also study the price movements of the raw materials. Because of the high volatility there is a possibility that it can affect the gross profit margins of the company. People tend to emphasize on estimating the product's demand while evaluating companies, but one must also undertake the study of supply side scenario. How many competitors does the company hold? Who has the pricing power and how quickly can the company change its production volumes, etc. So these were a few pointers to be taken care of while identifying great stock companies. Now let's move on to the next question. The second question goes like, how to gather more information on the companies? Again, a great question. You know, you can always check the company's annual reports or quarterly investor presentations and definitely tune into the conference calls. These are some great opportunities to interact with and question the senior management about the results and further plans ahead. But you see, it is also very easy to manipulate and sell a story. Therefore, you must consider a bit of scuttlebutting yourself. Wait, what did I just say? To scuttlebutt is to investigate the ground reality of a company. You know, you can speak to its customers and know more about the quality of the product. You can also get in touch with the suppliers and understand how much raw materials have been demanded. And lastly, you can definitely connect with the employees and know how well or not so well are they being treated and so on and on. All of this might seem a bit excessive or too intrusive on your end, but let me tell you, the intel that you gather is much more tangible than any other piece of information you would acquire from the company itself. Let's move on to the third question. How to decide which stocks to avoid? This one's pretty easy. Avoid stocks with poor management or bad promoters. These are a few things you really need to look at. If the promoter does not prioritize your interests, probably the interests of the minority shareholders, or has had a very sorry track record of being convicted of frauds or crimes, it is a strict no-no for investment. Moving on to the fourth question. How to become a millionaire by investing? Well, pretty interesting, isn't it? Well, spending time in the market is more important than timing the market. If you're patient enough, the market will definitely reward you in the longer run. I mean, there is no reason that you cannot gain wealth by investing into the stock markets. Look at Warren Buffett, Charlie Munger, or R.K. Damani. Just remember, start small, but start early. अब चलते हैं हमारे अगले सवाल की ओर. How to decide how many stocks to own at once? Well, we wish there was a perfect number for this question, but ideally, if you're investing for a longer term, 10 to 12 stocks is the right amount of number of stocks to own, with not more than 3 coming from the similar industry. This will help you stay diversified and at the same time make it pretty feasible for you to keep a track of each one of them. We would suggest you to not hold more than 20 stocks on the upper side and less than 5 to 7 stocks on the lower side. Moving on to the last and the final question of the segment. How to decide when to exit the stock? Spot on, what a question. People say that it's very difficult to time your exit than your entry into the stock market. However, here's what you could do. Pen down all your reasons to buy a particular stock. Once those reasons are fulfilled, you can exit your position. Secondly, you can also make an exit of about 50% of your investment once the stock has doubled. So essentially, you are just keeping your profits invested. And lastly, always have a stop loss whether you are investing or trading. Perhaps somewhere between 16 to 25% below your buy price. With this, we come to an end of this episode, and if these were some of the queries in your head, we must tell you, we are pretty impressed. No investment has a greater ROI than one made in gaining knowledge. You must check out our courses on portfolio management and stock market strategies in order to have a more comprehensive understanding of the world of the stock markets. Also, before you hop on to Google and find the answers to the most Googled questions on stock market, do not forget to like, share and subscribe to Valuationary.